Hello everyone, Mark Rusin here, and welcome back to another video. Today, we will be discussing 3 of the top growth stocks to buy in the month of September. Over the past few weeks, I have been going through recent quarterly reports, listening to conference calls, and going through valuations of numerous stocks. And in today's video, if you listen all the way through, I will be detailing out and summarizing each of these companies as well as price targets moving forward. Let's get started. First growth stock to buy in September is Roku, stock ticker ROKU. Now, many of you may already know what Roku is or even utilize Roku at home. Roku is a streaming platform. They have hardware products similar to an Apple TV or an Amazon Fire, but they have also built an integration into Roku televisions. Roku operates as a TV streaming platform as well as an emerging connected TV platform. The company is looking to monetize on the shift to streaming through digital advertising, as the company benefits as ad spending shifts towards streaming platforms away from linear TV. The company reported Q2 earnings at the beginning of August, which saw revenues climb 81% year over year to $645 million. Shares of Roku currently trade at $352. The company's growth has catapulted throughout the pandemic, resulting in shares doubling over the past 12 months. During that same period, shares have traded as high as $490 and as low as $150. The company has a current market cap of $47.65 billion. Looking at current valuation of the stock, shares of Roku trade at a forward price to sales of 12.9 times and an enterprise value to sales on a forward-looking basis of 11.9 times. Now, this valuation is certainly not cheap when compared to average measures, but Roku is expecting to increase revenues by 66% from current levels, based on analysts' expectations. Speaking of analysts, shares of Roku are rated a strong buy, with 14 analysts rating the stock a buy out of 15. The average price target over the next 12 months among those analysts is $495, representing a potential 40% upside from current levels. Roku offers ample opportunity in this digital advertising space. We've seen Google and Facebook and Trade Desk. Everyone is moving to this digital advertising platform. We saw it recently in the Q2 earnings of Google when it broke out YouTube's revenue, where the company saw the highest ad spent on YouTube content, and the company paid out YouTube creators the most it has ever done so in the history of the company. The second growth stock we will discuss today is Spotify, stock ticker SPOT. Now, many of you may already be familiar with Spotify as well, and you may use it on a daily or weekly basis to listen to your favorite audio playlist or songs or favorite podcasts. Spotify has turned into a dominant performer in this space and the clear leader in audio streaming. In fact, Spotify is the world's most popular global audio streaming provider. The company operates in over 90 countries with over 350 million active monthly users. The company monetizes the creativity of its creators by charging a monthly subscription fee and through advertisements. The area of podcasts is huge for the company moving forward, so much so that they have been paying big dollars to retain the rights for specific podcasts to stream exclusive on Spotify. Podcast creators such as Joe Rogan, Michelle Obama, Barack Obama, Kim Kardashian, and many others stream podcasts exclusively on Spotify. The strategy behind all this has been built on the craze of podcasts, which have grown exponentially over the past few years. In fact, earlier this year, the company launched a paid subscription for creators to offer for their podcasts if they so choose, and then Spotify retains a percentage of the revenue. The company has been making great strides over the past 12 to 18 months, but the stock has not necessarily followed suit of late. Shares of Spotify currently trade at $234. Over the past 12 months, shares of Spotify have declined 16%. Year-to-date, shares are down 25%. Turning to valuation, shares of Spotify currently trade at a forward price-to-sales ratio of 3.4 times and a forward enterprise value to sale of 3.1 times. Now, this is a very reasonable valuation for a company that is expected to grow revenues by 32% in the coming year based on analysts' expectations. Speaking of analysts, shares of Spotify are rated a moderate buy by 16 total analysts. 9 of these analysts rank the stock a buy, 5 rate the stock a hold, and 2 rate the stock a sell. The average price target over the next 12 months among those analysts is $297, representing a potential 26% upside from current levels. And when you think of Spotify, you automatically think of the audio side. But one must understand that the podcast side is huge. The company is investing millions of dollars in podcasts going forward. They understand the growth in podcasts, and they understand that if they have the best content, that users will come over and pay exclusive for these podcasts. The third top growth stock to buy in the month of September is DermaTech, stock ticker DMTK. Now, many of you may not be familiar with DermaTech. In fact, it is my favorite small cap stock. I may be a little biased considering it's the only small cap stock in my portfolio at this time. But for those of you unaware, DermaTech is a transformative technology company operating within the healthcare sector. The company is taking on skin cancer, particularly melanoma, head-on. Investing in a company like this takes a long-term view and patience. The testing and trial phases are long, and then after years of work, the company must attain regulatory approval before then marketing the product. The company's current main product is focused on early detection of melanoma. In fact, statistics show that 1 in 5 Americans will develop skin cancer by the age of 70. This is where DermaTech steps in. The company is focused on innovation and commercialization of precision dermatology. DermaTech has invented a non-invasive product similar to a sticker or patch-like substance that can rub on the area of question to detect possible melanoma. The diagnosis rate has stood at a 99% accuracy. This is proven to be more accurate than a traditional biopsy procedure, which requires actual skin samples to be cut out. The company has been performing quite well over the past year, with revenues doubling year over year. As more and more state and private insurances sign on and more dermatologists begin using the product, DermaTech, in my opinion, will see shares skyrocket. Shares of DermaTech currently trade at $37.20. Over the past 12 months, shares of DermaTech have climbed an impressive 215% and traded between a range of $84.49 and as low as $9.85 over the past 52 weeks. Looking at the current valuation of the stock, shares of DermaTech currently trade at a forward price-to-sales ratio of 39.7 times and a forward enterprise value to sales of 40.7 times. Now, I understand that these valuations are astronomical, but when you look at the details, DermaTech is a high-risk, high-reward play. The company is in the early stages, again being a small-cap stock, but analysts expect revenue growth of nearly 200% in the next year. Being a small-cap stock, the company will see plenty of volatility and does not currently have a ton of coverage at the moment in terms of analysts. Tip ranks only show one active analyst for DermaTech who happens to rate the stock a strong buy, with a 12-month price target of $53, which equates to an upside of over 40%. And there you have it, 3 top growth stocks to buy in the month of September. As always, please perform your due diligence, as these stocks are my opinion only. Roku is looking to monetize on the digital advertising boom, and they have built a platform to be very successful in this space. They have their hardware products, and they have integrated into smart TVs as well. Spotify, although you may think of it as just an audio subscription company, their play on podcasts is huge. The company is going all in on podcasts. And lastly, DermaTech, the high-risk, high-reward play that I mentioned here. again, you must take a long-term view and be very patient for this to play out. Companies like this are known to be very volatile, but I have strong speculation that DermaTech will be very successful as more and more insurances sign on and more dermatologists sign on to the idea as well. So that's it. The 3 stocks for September: Roku, Spotify, and DermaTech. In the comments below, let me know of a few growth stocks that you see as great opportunities in the month of September. And if you enjoyed the video, please again consider clicking that like button below, as it will be extremely helpful in the growth of this channel moving forward. And consider subscribing so you are notified anytime we drop a new video. Thanks for listening, and we'll see you next time. Take care.